Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra. Well, it is the season of IPOs and another IPO is going to be hitting the street very soon. And I have the top management of the company to discuss more about the upcoming IPO. We're talking about Uniparts India Limited, which is a manufacturer of engineered systems and solutions. And it's now going to be opening its IPO for subscription on November 30th. Joining in with me is Mr. Gurdeep Soni. He is the chairman and managing director at Uniparts India Limited. Welcome, sir, and thank you so much for taking the time out for this discussion on Business Today TV.
Thank you so much, and I thank you for giving me this opportunity to present my company to you.
Thank you, sir. So let me kickstart by understanding from you. I think this is a complete offer for sale that you're looking at. The price band has also been fixed now between 548 to 577 per share. And the company is also looking, the promoters and the existing investors will be looking to offload share of sales of almost 1.44 crore shares by the promoters. Help us understand what is the objective and the aim of this IPO and the size that you're looking at now.
Yes, definitely. I would like to tell you that we have a private equity investor in a company that owns 20.68% of the company.
Mm-hmm.
We have a small total 14 shareholders based in USA who own about another 1.8% stock in the company. So all these shareholders are making a full exit, and the balance is being made up as advised by our bankers to make a sizable issue. It is a complete OFS because the company itself is very cash rich, in fact, and doesn't need any fresh money for itself.
Mm-hmm.
We have, in fact, our ROCE is 31% and ROE is 27%, and our EBITDA is in the range of 22%, and our PAT is 14%. In fact, we have free cash of 7%. This is taking care of, after taking care of capex and working capital requirements. So
Okay.
having said that, our debt, which was actually 250 crores 4 years ago, is on 31st March was only 100 crores, and at peak is close to 70 crores. So the company doesn't need fresh money.
All right. Help me understand a little bit, sir. I think there were two more attempts by the company to launch an IPO earlier. You had submitted the papers with the SEBI, I think in September 2014, and then also again in December 2018. And this is the third time that you're actually going to be launching your IPO. Help me understand, why did you not launch an IPO in those 2 years, and what has changed now for you?
So clearly, both the times the attempt was made primarily to give an exit to the private equity investors. Market, but at that time, both the times, the markets were not conducive for IPO. Somehow the IPO season, as they say, was not there, and so the banks told us to withdraw before going into the market at that point in time. Having said that, this time, of course, the markets are very buoyant. The company is exceptionally well, and therefore, I think we are in the right place in the right time, for an IPO.
Okay. Could you give me a sense of what will be the post-listing shareholding after the OFS and this issue gets launched?
Yes, definitely. So like I mentioned that about 23% stock has been offered by private equity and some other shareholders, and some of it by the promoters. The promoters currently have a little over 75% stock. Post the IPO, the promoters will be close to 66%. And we have another 2.5% in an ESOP trust. So the key management, the professional management that we have is holding 2.5% stock to the ESOP.
Okay. Okay, understood. Just a little bit on the expansion side, since you said that you already have a lot of cash on the books and there's no need to raise any fresh debt for the company as of now. You already have about 5 manufacturing facilities. Are there any expansion plans in India, and perhaps to go for any inorganic expansions as well, for which the cash may be used going forward?
Correct. So we have 5 manufacturing locations in India. One two in Noida and 2 in Ludhiana, and we actually have a 6th one in USA. In addition to that, we have 3 warehouses. 2 of them are in USA and 1 is in Germany. And as we speak, our next expansion factory is coming up in Ludhiana. We have gone on without investing in land and building. We've taken a place on lease, and this will be our expansion used for our expansion for the next 2 years as well.
Okay, so by when do you see the Ludhiana facility getting operational, and how soon do you see the revenues contributing to the books from that Ludhiana facility as well?
The Ludhiana facility, although it's been set up for taking care of our growth numbers for the next financial year, we are getting into production in December so that we are ramping up, So by the time we hit April, we will be in full force and running.
Okay. Could you also give me a sense of what is the revenue mix in terms of the different verticals that you operate in, the conventional, the non-conventional, the export business, the domestic business? If you could give me a sense of that, and where do you see it growing, the mix shifting, or it's staying like this only?
So we are primarily an exporting company. 3% of our revenues come from outside the country. 13.5% come from what we sell in India. We started in 1984 as only an exporting company. And it was only in the year 2000 that we actually started selling for the first time in India. And that was because two of my customers, John Deere and Case New Holland, were setting up plants in India. And so we decided to sell to them in India. But today, like I said, 83% of my sales are from overseas, in USA, Europe, Japan, and 13.5% in India.
Okay, understood. Could you give me a little sense on the market share that you hold as far as your conventional business is concerned? Because the 3-point linkage systems and the precision machine parts, that's where your concentration is as of now. If you give me a market share sense.
Absolutely. So just for your viewers, we are in the making parts for what we call as a 3-point linkage system that is attached behind a tractor, used by the farmer to attach his implement to the tractor. So the 3-point linkage is an integral part of the tractor and is sold by the OEMs to the farmer. So basically, our customers are the global OEMs who make these tractors. Are one of the top 3 globally manufacturing this 3-point linkage system, and we have a market share of global market share of 16.68% in this. And what is more important is that out of the top 10 agricultural manufacturing companies in the world, all top my customers.
Okay. Okay.
And out of my total business, about 55% of my business is on this particular sector, which is the 3-point linkage system. My second one is in construction machinery. We make what is known as articulation joints. When you look at any construction machinery and you see the arm, whether it's a front loader or a back loader or a skid steer, when the arm moves, it uses very specialized articulation joints over there, and that is what we excel in. Again, this is a little fragmented market, but we still have a global share of 5.92% in this sector. And out of the top 10 global companies in the world making construction machinery outside of China, I particularly emphasize outside of China because China is the largest manufacturer of construction machinery, but all of China is for China, and we don't do any business in China, nor do we plan to. Out of the top 10, top 5 are my customers, including the largest company in the world. So we have a great list of customers globally, and 83% is export. Again, 87% of what we sell is made in India, and 13% is made in my location, my factory based in USA.
Okay, understood that. Since you mentioned that China theme, I want to take that a little further. You are a global construction and agriculture equipment maker, a leader in that as well, one of the leaders on the top. Do you believe the China+1 theme will have enough opportunities for Indian players in this business, especially such as yours, going forward from here? What are the kind of growth opportunities that you will be looking at?
Absolutely. The China+1 is playing out so well. In fact, the process started about 4 years ago when the Trump tariffs came, when they put 25% import duties on China. But the couple of COVID years kind of put things a little bit on the background, but post that, now we are seeing a tremendous shift of business coming to us from our major customers who were buying from China and now they want to buy from India. Clearly, there's a term now called, from offshoring, they're calling what is known as friend shoring. They want to buy from friendly countries, and we are definitely looking at a shift. In fact, CRISIL is saying that our industry both will grow at about 7% per year,
Okay.
5 years. We will be growing a lot more than that simply because of the China+1 thing. And
Okay. So could you quantify that for the next 2-3 years? What's the growth visibility that you see on the top line, if you could share, and overall?
So let me just tell you that on the last 6 years, we've grown 12.1% on top line. Our CAGR growth on EBITDA has been 30% and on PAT has been 40%. I mentioned that my ROCE is 31% and my ROE is 26.8%. And looking at what CRISIL is saying, how we will grow and the China+1, let me mention one more reason why the business is going to grow beyond China+1 reason is that last year, the USA passed a $1 trillion infrastructure bill, which means that they are going to be spending over the next 4 to 5 years on infrastructure build in the United States. And that is, again, giving a lot of push for equipment required for the build. Oil and gas is, again, companies are making a lot of money, and the spend on oil and gas infrastructure is, again, at the highest level. And then, globally, we've been seeing these disasters, more hurricanes and things like that. And truly, that all leads to more rebuild of, what is affected. So clearly, when we look at a commentary from the biggest construction company in the world, saying that the peak may be in 2026. So they are really seeing a very good moving forward. They are, in fact, projecting close to a 13 to 15% growth even next year for their business. Again, on the agriculture side, the top company in the world is also, talking about very good growth numbers. Part of that is because, the Russia-Ukraine war actually took out almost 40 million tons of surplus export grain out of the markets, 20 million tons from Ukraine and 20 from Russia because of embargoes. Even in India, the export started with a bang, but the government stopped them because they wanted to control inflation.
Sure.
But they have not really done that. And so the farmer in Europe and USA, they say that his income is at the highest in the last 5 years. So the farmer has a lot of money in his pocket. He's making a lot of money. The inventories in the dealerships are almost negligible. In fact, both in construction and agricultural machinery, our customers are talking about delays of 3 to 6 months in supplying machines. So we are really looking at a good pent-up demand because of all these reasons that are happening, and are a lot more than what CRISIL is talking about.
Okay, understood that. Well, thank you so much, Mr. Soni, for giving us all those insights about the upcoming IPO. All the very best to you. Hope to catch up very soon with you once the IPO gets listed as well. And we will definitely get more insights from you for all our viewers as well. Thank you so much for being with us.
Thank you for giving me the opportunity and to allowing me to share my company with your viewers. Thank you so much.
If you like the video, do like, comment, share and subscribe.